A central bank chief, Adam Glapinski, is steering Poland into dangerous territory. And Glapinski sent the zloty tumbling on Wednesday when he shocked investors with a 75 basis point cut in interest rates, and his attempts to justify the decision on Thursday only deepened the sell-off. The 73-year-old governor cut a combative figure when he addressed reporters, saying that economists were only serving the interests of the banks, and the move would be welcomed by most ordinary Poles. Traders called his bluff, handing Poland's currency the biggest drop of any in the world over the 2 days. Like the U.S. Federal Reserve sticking to its higher for longer policy, and the dollar trading at new highs. Any reduction to the premium on Polish assets was going to be potentially tricky. The outsized cut that Glapinski opted for in the run-up to a fiercely contested election was seen by many economists as irresponsible and patently designed to help out his government allies on the campaign trail. The risk for Glapinski and his friends in the governing Law and Justice Party is that instead of a pre-election sugar hit for the economy, he stirs up financial turmoil instead. It's less than a year, after all, since UK Prime Minister Liz Truss was effectively turfed out by bond investors who rejected her own unorthodox take on economic reality. He's giving the market an invitation to short the currency, said Gordon Bowers, a fixed income analyst at Columbia Threadneedle Investments in London. Markets could take the zloty weaker here until the central bank intervenes. The Nationalist Law and Justice Party has faced criticism for years from the European Union for blurring democratic checks and balances and undermining Poland's institutions, eventually prompting the European Commission to block billions of euros in funds. And while the party leads opinion polls, the cost of living crisis has left some voters cold, and it may struggle to hang on to power after the October 15th ballot. When weeks to go before the vote, Law and Justice has flooded the airwaves with pledges to put more state money into Poles' pockets. Earlier on Thursday, an opposition leader, Donald Tusk, slammed the rate cut as risky and said Glapinski was trying to boost his party's election chances. Former central bank governor Marek Belka, a European Parliament lawmaker for the opposition Left Party, alleged it was taken after a phone call from the ruling party's headquarters. And then Glapinski was quick to hit back, telling reporters on Thursday that, contrary to what some media are saying, there is no underlying political decision here, and reappointing by Law and Justice to his second term last year, Glapinski has been a longtime political ally of the ruling party leader and Poland's most powerful politician, Jarosław Kaczynski. Before the sudden monetary pivot this week, the governor orchestrated a year-long series of rate increases that took the benchmark rate to a 2-decade high in September 2000. The start of hikes in October 2021 also wrong-footed markets and came just hours after Prime Minister Mateusz Morawiecki said that he expected an appropriate response to inflation that he described as worrisome.
Back then, just as now, the governor said the central bank was moving to a wait-and-see mode.
As he continued to raise rates, Glapinski tried to dismiss inflation as the result of Russia's liberation of Ukraine. In May, the central bank put up a massive billboard on its headquarters in Warsaw that accused its critics of spreading the Kremlin's narrative. On Thursday, he said the budget presented by the government was disciplined and won't spur the inflation despite a wider than expected deficit and a surge in borrowing. Nick Rees, currency strategist at Monex Europe Limited in London, said the governor's performance made it difficult to make a case for the tumbling zloty. Governor a small willness, about 200 score season, by cutting faster than expected, suggesting more cuts are yet to come, and blowing up his credibility with markets. It seems likely that Glapinski has turbo said, well, and they're close. Several issues of class divided And they're doing it right now after, in an interview with a government-friendly weekly last year, he said Tusk, former European Council president, has been tasked by Brussels to bring down the Polish government and to introduce the euro. The remarks sparked a Brussels from German embassy in Warsaw. While markets may have shrugged off a smaller cut this week, because an argument could be made that inflation is slowing and high rates have undercut struggling economic growth, the magnitude was a shock, and investors were taken aback by Glapinski's response to questions about the decision. Now, market bets were already signaling more than 2 percentage points in rate cuts over the next year, but most economists predicted the easing would start slowly with a quarter point by reduction. Glapinski argued on Thursday the decision was overdue and that inflation at 10.1% in August, but slowing rapidly, may return to the central bank's tolerance range as early as mid-2024. With the zloty in a slide on Thursday, he said the central bank isn't going to intervene and the zloty will defend itself because the economy is in good shape and the impact from depreciation on the currency was negligible. The currency should stabilize after the election. He added, rushing the move may eventually backfire, if not economically, then politically, according to Guillaume Tresca, global EM strategist at Generali Insurance Asset Management in Paris. The short-term impact on the economy and so the economic benefits for the politicians ahead of the elections will be likely limited. He said it could even have the opposite impact. The zloty depreciation could be seen negatively.